Welcome to another one of our Antipodes Insights video, where today we'll be focused on EM and Asian equities. I'm joined by John Stavliotis, Portfolio Manager for the Antipodes Emerging Markets, Asia and China funds. Welcome, John.
Thanks for having me.
So, with regards to Asia, it always seems, when we're talking to investors, it's always continually being the great unknown known. Investors are aware of what it's made up of, what its potential is, but what they're unaware of is its natural underweight in a lot of the global indices that you invest in, especially if you are targeting a particular asset allocation. So in light of this, John, why should investors consider having a bespoke allocation to Asia?
Yeah, look, I think Asia is important in the world, right? And it really gets underemphasized, right? So if you look at China, for example, as a proxy for Asia, we'll use, China's population as a percentage of world is about 17%.
Yep.
Of GDP, it's about 18%. If you actually use total market cap weighted global market cap, China's high teens percentage, right?
Okay.
But then MSCI All Country World, it's 3.8%.
Wow.
Right.
Okay.
And then most people probably are invested in MSCI World, which doesn't have any emerging markets in it, right?
Okay.
So I do really think that in many portfolios, Asia is, I guess, underrepresented. So then why, I guess, is your question. It's really because you've got, higher growth in Asia at a GDP level.
Yep.
You can actually get exposure to the underlying developments of these economies, which is that GDP growth. But then you can also get exposure to structural opportunities like tech hardware supply chain, which is all in Asia, right? And then Asia is cheaper than what you're currently paying for companies in the US, for example. So, China is currently trading at about 13 times PE.
Yep.
Indonesia, as an example, is trading at a 25th percentile of where it's historically traded.
Oh, wow.
A significant discount when most markets are trading kind of way beyond, historical levels of valuations.
So there's a couple of arguments already there. What about from a correlation perspective, if people were to choose that bespoke allocation?
Yeah, and it's interesting, right? When you're forming portfolios, you kind of want to have uncorrelated sources of alpha, and for Asia's correlation to world indices, it's about 0.4,
Okay.
and to the Australian index or MSCI Australia is how we've calculated. It's actually 0.33. So it's fairly uncorrelated to what you may already have in your portfolio.
Okay. And over, the last year, we've seen broad emerging markets, Asia, perform very well.
Yeah.
And a lot of investors always ask, is this the time to get in? Have I missed out? What's your view of that at the moment?
Yeah, look, emerging market cycles are quite long, right?
Okay.
And we've been through a quite painful cycle over the last 15 years of underperformance relative to developed markets. We think there are some reasons why that's changing. Valuation is one that I've already talked about. The other is you can see it is high correlation with US dollar strength and weakness. Weaker US dollar typically helps allocations to EM, and we're starting to see the US dollar roll over. Interest rates and global growth. We are starting to see global growth improve, and really that US exceptionalism, which is what's driven that flow of capital to the US, is somewhat starting to maybe not reverse, but at least equalize with higher global GDP growth, and we're seeing that in commodity prices improve, etc. If that continues, we think that EM cycle will be a long cycle on the upway. And another way to put into context, the amount of dollars in that Magnificent Seven is currently over 2 times the value of the MSCI EM index.
Wow.
So a little bit of money coming out of the US or these large caps will have a huge effect on, Asian equities or emerging market equities. And that's why that cycle can last for quite a long time.
Fantastic. Now, if we bring that back to us at Antipodes, our investment DNA is pragmatic value. So what does that mean to you as a portfolio manager for these funds, and why do you think it works in Asia?
Yeah, look, I think it's really, really important to think about this topic. Pragmatic value means we're looking for companies that are cheap relative to the resilience and growth of the business. And we use industry-led research to identify these opportunities. So breaking those two things down, industry-led, we've got a global team of investment professionals. We are looking at industries on a global perspective. So we've got an analyst that covers tech globally, and they can help us pick stocks in Asia in that tech supply chain. That's a huge, I think, advantage to someone that's just looking at Asia. And then from a pragmatic value approach, you're investing in Asia for the growth, right? So our philosophy is value-based. We want companies that are cheap for the growth and resilience. So we're able to identify these companies that can benefit from Asia's growth, but is not currently being priced in the market. And that's what we think will help us outperform over the long term.
Fantastic. So there you have it, an introduction to Asia and why the investment potential is there. If you have any questions or have any inquiries, please speak to one of your Antipodes representatives or Pinnacle Investment Management.